Alright folks, buckle up. Today we're diving deep into a controversy that's got Wall Street buzzing and tech investors sweating. Palantir. The name alone evokes images of shadowy government contracts, cutting-edge data analysis, and, well, a whole lot of mystery. But is that mystery justified? Is Palantir's current valuation reflecting real-world value, or is it just hype? The Financial Times just dropped a bombshell with the headline, Palantir's exorbitant valuation mixes mystery and mayhem. Exorbitant? Mayhem? That's fighting talk. So, is this the beginning of the end for Palantir's meteoric rise, or is this just another speed bump on the road to global data domination? We're breaking it all down, right now. Let's get into it. Okay, so the Financial Times article, while behind a paywall, sorry about that, but hey, they gotta eat too, is essentially questioning whether Palantir's current market value is sustainable. They're pointing to a disconnect between the company's actual performance and its sky-high stock price. Look, Palantir's got some impressive tech, no doubt. But is it that impressive? Remember, we're talking about a company built on complex algorithms, government contracts, and a business model that's not exactly transparent. The mystery they're referring to is the inherent difficulty in understanding exactly how Palantir's technology works and how much value it truly delivers. And the mayhem? That's the potential fallout if investors start questioning the fundamentals. Think of it like this. A house built on sand. Looks great from the outside, but one strong wave and poof. So, let's explore what the potential waves could be. First, let's look at the immediate, level 1 impacts. Obvious one, Palantir's stock price. A headline like that? It's not exactly a confidence booster. We could see a sell-off as investors get nervous and start dumping their shares. And trust me, fear is contagious on Wall Street. Then we have the analysts. These guys are paid to dissect companies like Palantir, and a headline like that is going to make them sharpen their knives. Expect increased scrutiny of their financials, their business model, their growth prospects, everything. They might revise their price targets, downgrade their recommendations. Not good for Palantir's image. And finally, investor sentiment. Right now, a lot of people are bullish on Palantir. But this article could shift that sentiment, making it harder for the company to attract new investors and maintain its current valuation. It's a domino effect, folks. All right, let's zoom out a bit. What are the level 2, adjacent industry impacts? Well, if Palantir's valuation is being questioned, it could cast a shadow on other data analytics companies, especially those with similar business models or high growth expectations. Investors might start reevaluating their positions in companies like Snowflake, C3.ai, or even smaller, privately held startups. This could also affect venture capital and private equity funding. VCs and PE firms might become more cautious about investing in data analytics startups, demanding more rigorous due diligence and lower valuations. And here's a big one, government contracts. Palantir relies heavily on these. Increased scrutiny could lead to more questioning of the value and necessity of these contracts, potentially impacting Palantir's future revenue streams. Think about it. Politicians are sensitive to public opinion, and if the public starts questioning the value of these contracts, things could get dicey. Okay, now let's go full butterfly effect. What are the level 3, socioeconomic impacts? This is where things get real. If Palantir's stock price declines significantly and its growth slows, it could lead to cost-cutting measures, including layoffs. That's not just numbers on a spreadsheet. That's real people losing their jobs. A more challenging financial environment could also force Palantir to reduce its investments in research and development, potentially slowing down innovation in the data analytics field. And here's the kicker. If it turns out that Palantir's valuation was indeed inflated, it could erode public trust in the financial markets and in companies that rely on complex algorithms and data analysis. That's a big deal, folks. It can shake the entire system. So, let's talk risk. Business risks. The biggest one is the valuation bubble itself. If Palantir is overvalued, it's only a matter of time before the bubble bursts. This could lead to a stock price correction, impacting investors who bought in at inflated prices. A high valuation can also make it difficult to maintain growth expectations, leading to investor disappointment. And then there's market sentiment. Mystery and mayhem suggests uncertainty surrounding the company's business model or financials. Negative market sentiment can quickly erode investor confidence and drive down the stock price. Finally, competition. An exorbitant valuation might attract more competitors into the market, as they see an opportunity to capitalize on the perceived overvaluation. Now, let's talk about technical risks. Without more context, it's difficult to pinpoint specific technical risks. However, The mystery aspect could hint at a reliance on complex or proprietary technologies that are difficult to understand or maintain. Think vendor lock-in. If Palantir's technology struggles to scale effectively, it could impact its ability to deliver value to customers and justify its valuation. And here's a big one: data security and privacy. If Palantir handles sensitive data, which is highly probable given its association with data analysis and potentially government contracts, any data breaches or privacy violations could have severe legal, financial, and reputational consequences. This is a constant threat for any company handling sensitive data. All right, let's get ethical. Palantir is known for its work with governments and law enforcement. A major ethical risk is the potential for its technology to be used for mass surveillance, discrimination, or other unethical purposes. Think about facial recognition technology, for example. The mystery element also suggests a lack of transparency in Palantir's operations or technology. This can fuel public distrust and raise ethical concerns. And what about bias in algorithms? If Palantir's algorithms are biased, they could perpetuate discriminatory outcomes in areas like law enforcement or resource allocation. And finally, accountability. It might be difficult to hold Palantir accountable for the actions of its clients who use its technology. These are serious ethical considerations that we need to be aware of. Now, let's shift gears and talk about something completely different. Or is it? The Financial Times also dropped another headline. Gilt sell-off reflects glumness as usual for UK finance groups. Gilts? Glumness? What's going on across the pond? Well, gilts are essentially UK government bonds. A sell-off means investors are losing confidence in the UK economy, and that's never a good sign. So, what are the potential ripple effects of this gilt sell-off? And how might it be connected to the overall global economic picture? Let's break it down. First, the direct impact. A further decline in UK gilt prices. The headline indicates a negative trend already in motion. The article likely details the reasons behind the sell-off, which could exacerbate the downward pressure on gilt prices. This leads to increased borrowing costs for the UK government. Lower gilt prices mean higher yields, interest rates. This increases the cost for the UK government to borrow money, potentially straining public finances. And finally, a weakening of the British pound. A sell-off in gilts can be seen as a lack of confidence in the UK economy, potentially leading to a weakening of the British pound against other currencies. Your summer vacation to London just got a little cheaper, maybe. Now, the adjacent industry impact. UK banks and insurance companies hold significant amounts of gilts. A sell-off could negatively impact their balance sheets and profitability. And what about pension funds? Pension funds also invest heavily in gilts. Lower gilt prices could create funding gaps in pension schemes, potentially leading to lower payouts for retirees. This is a serious issue for millions of people. And finally, residential and commercial property markets. Higher interest rates ripple through the economy. Mortgage rates would likely rise, impacting the housing market. Businesses might delay investments due to higher borrowing costs, affecting commercial property. It's all connected, folks. And now, the socio-economic impact. Increased cost of living. A weaker pound makes imports more expensive, contributing to inflation and increasing the cost of living for UK citizens. This hits everyone, especially those on fixed incomes. Increased risk of recession. Higher borrowing costs for the government and businesses could slow down economic growth, increasing the risk of a recession. And what about political instability? Economic hardship can lead to social unrest and political instability. The government may face increased pressure to address the economic challenges. And finally, impact on public services. If the government's borrowing costs increase significantly, it may be forced to cut spending on public services like healthcare, education, and infrastructure. And this is a tough situation for everyone involved. So, what's the takeaway here? Are Palantir and the UK gilt market completely unrelated? Maybe, but they both highlight potential negative trends in the financial markets. Both situations present risks, not just to the companies and industries directly involved, but also to the broader economy and society. The severity of these impacts depends on the extent and duration of the trends described in the articles. And that's the million-dollar question. How long will these trends last? Are they just temporary blips, or are they signs of something more serious? Look, investing is always a risk. There are no guarantees. But by understanding the potential risks and ripple effects of events like these, you can make more informed decisions. Do your own research. Don't just blindly follow the hype. And remember, stay informed, stay vigilant, and stay critical. Now, I want to hear from you. What are your thoughts on Palantir's valuation? Do you think it's justified? Or is it a bubble waiting to burst? And what about the UK gilt market? Are you concerned about the potential impact on the global economy? Let me know in the comments below. And if you found this video helpful, please like, subscribe, and share it with your friends. Until next time, stay safe out there.